If you are curious about how options prices move, you need to understand the Greeks. Let us break down these 4 key measurements. The Greeks are mathematical values that help investors measure the different risks associated with trading options contracts. While there are several Greeks, these 4 are the standard tools for understanding how an option contract responds to market changes. Delta measures price moves, gamma tracks acceleration, theta tracks the daily loss of value, and vega tracks implied volatility impact. Delta tells you how the price changes with the stock, while theta tells you how much value evaporates purely due to the passage of time. Theta decay is not linear. As you get closer to the expiration date, the time value of an option disappears much faster. Remember that these metrics are estimates based on models. They help clarify risk, but they cannot predict the future of the market. Understanding the Greeks takes practice. Always research thoroughly before trading. Thanks for watching and stay curious about your financial education.